Hello everyone, welcome back to another real estate market update. I'm Uros Markovic. I'm going to be your host today and I have so much information to share with you. So let's dive straight in. March was full of a real estate madness. If there were any doubters out there about whether or not the Calgary and area real estate market would have ability to keep up its pace, I think this month have crushed them all. So let's start with the sales summary. As you see on the graph, this March surpassed the production we had during our last peak of 2013 and 2014. Truly an incredible pace that continues to have many shaking their heads. The second part that makes the sales story so impressive is the change from February to March. In February, we sold 1,855 homes, which was really strong. But now we have increased this month over month for about 1,000 homes, bringing our sales total in March to 2,903. This is a 56% increase month over month. Well, historically, we would see this trend up by 20 to 30%, but not above 50. So many are asking me, what is next for us? Is this the peak of the year or are we going any higher? Well, here is the thing to note. The only time in our selling history we recorded 2 months in a row of sales over 1,800 was in 2006-2007. We didn't do it in our last great run in 2012, 13 and 14. I tell you all this to put what is happening right now in a real context so you can wrap your heads around the real pace. And this is near uncharted waters, especially in the state of our economy, the pandemic, the high unemployment and everyone else around us. On top of this happened in a month where oil and gas prices didn't really increase. The last 20 days of March showed an average sales per day over 90, and the last week of month was at 105. Time will tell how long this demand continues. Alright, so the stage is set now for our impressive sales results. But let's shift the gears now and talk about the inventory situation. As you see by the inventory graph, we started the month with 4,563 homes on the market. At the end of March, it was 5,418. That is an increase of about 850. What does this telling us? Well, despite the incredible continued sales momentum, we are still building the inventory. We are adding to the overall active inventory available for purchase. We have seen a listings per day total of 126 at the beginning of the month, climbing up to as high as 147 on a weekly average. As to we finished the month, we were sitting at 139. At the end of March, we found ourselves with 445 fewer homes on market than we did at the same time last year. And if you remember, this is when we started to see the pullback in our market due to start of the state of the emergency. As this graph shows, when comparing to the last 15 years, we are sitting near the middle side of the inventory, not on the extreme low side. This will help keep the market in check, and if continues, we won't flip fully into a red hot territory. Well, let's talk about the pricing picture. The recent surge in sales volume has put upward pressure on the market at the level we haven't experienced since 2013-2014. Last month we discussed that year over year we are seeing between 1 to 5% in positive appreciation across various property types in our benchmark sales price. This past month we continued that upward trend. So comparing March 2021 to last March, we are seeing a benchmark price increase of 7%. This is the single biggest year-over-year bump in values that we have since 2013-2014 run. This, as shown by the graph, is different across the districts and it is different across property types. The detached market saw a year-over-year increase of 8%. The raw home market saw nearly 3%. The semi-detached market had 6% growth, and the apartment market finished the month with an improvement of 3%. All systems are go right now. It is a welcome benefit to all homeowners who have seen nothing but decline of values for several years. And with this gain, we came back to 2.5 years ago and now find ourselves an overall price equal to 2018. This is a positive market recovery news story. Now I know you're saying, okay Uros, but what does this all mean? Well, now that you have heard the high-level information on the sales summary, the inventory story and pricing picture, let's switch gears to tell you what all this really means. In this section, I will pull up some additional graph and analysis to present what I feel is the true story. It is one thing to talk about the sales, inventory and prices independently to provide some color to our story, but let's talk about how they will end up working together. That requires talking about two major things: sales to new listing ratio and months of supply. These tell us if the market is tightening up and starting to push further into seller's market, or if things are losing up and getting more towards a balanced market. First, let's look at the sales to new listing ratio graph for March. So what do you see? We started the month at about 60% number. This was a very healthy market, but I wouldn't consider it red hot, like newspapers were saying. That number crept up throughout the month and hit the peak at a nearly 80% and currently sits at 75%. This means 3 out of every 4 new listings are getting sold. This is no longer a balanced market. This has us in a fully seller's market. I'll always say, but this isn't the same across all property types, but this month it is very close. Detached 82%, row houses 78%, semi-detached 83%, and the sole point of difference, the apartments at a 50%. The second item to look at is the months of supply. When you look at the following graph, you will see that this number has trended slightly lower. We started the month of March with just over 2 months and ended at 1.8. This means that it will take us slightly less time to fully sell through all our active inventory now than it would have 1 month ago. The property type breakdown is as follows. Detached, 117 months of supply, the fastest moving market. Row homes, 2.2. Semi-detached, 1.6, and apartments of 4.02. This pace increased for all these market segments throughout the month. This is showing us that we are still tightening market, and a tighter market means a few things. First thing is sales to list price ratio will get closer and closer to the list price. Days on market will continue to get lower. March, for instance, was down to 35 from 52 last year. And third, prices will continue to push higher. Now, as I mentioned in the earlier section on pricing, it is not likely we will see more than a couple of months of sales at this high of a level. It has been done only once in our entire history. The new listing per day easing that has happened recently, and the fact that the last week of March was the highest sale week of the year will likely play into our market getting tighter before it loosens. I mentioned earlier that we will eclipse the total active inventory we had last year in the coming week, and our seasonal peak inventory level should be ahead of us still in the next 3 months. So in summary, we know it's hot right now. It is because demand is pushing the number of sales quite close to the level of the inventory that is hitting the market. That makes it hot. It is very likely we are near peak sales figures, but who really knows? We are just coming up on the season where we would typically expect the highest number of sales and the most properties to hit the market. Will this happen? Are there really that many more homeowners able to sell or wanting to sell and providing more supply to this demand? I don't believe anybody really knows how this presumed busy season will turn out. As always, I'll be watching things by day and reporting to you each month with the most accurate picture of our market to help you make your buying and selling decisions, or to simply provide some peace of mind in understanding of what all this is doing for our home values. So if you have any questions, please don't hesitate to reach out.